Hello, everybody, and welcome to this week's podcast here. My name is Miles Clark. I'm joined here by good friend and colleague Ian Saunders. How you doing?
Doing well in this freezer box compared to the temperature outside.
Yeah, it's a little warm. We're going through a bit of a heat wave currently. It's like 95 degrees when you walk outside in the morning. And I'll tell you this, bad week for your power to go out and my AC to stop working in the apartment.
Yeah, we don't want to get into power. I was on a trip last week traveling, meeting with some clients out in lovely Colorado. Came back, got home pretty late Sunday, or I guess really early Monday morning. Turns out our power had been out for 4 days. So that was not a very welcome experience to come back home to. But it's all good. The house is cool. It's cool now, so that's the important thing.
Well, I'll tell you, it's cool in your house. Markets have been hot here this week there with now the Nasdaq 100 hitting new all-time highs over the last week. The S&P 500 is flirting with it as we speak. We're recording here on Thursday. You all are listening at the earliest on Friday, the 26th. We're going to go through our five charts for the week here. We've got a really good selection lined up. I'm certainly super excited for it. I mentioned there the Nasdaq 100 that is hitting all-time highs. That's going to be our first chart for the day. So,
Yeah, I mean, we're hitting on Nasdaq 100. What are we doing? Nasdaq 100, the growth
yeah,
relative, hitting on a couple stocks in the semiconductor space, and then maybe rounding out with some wonderful correlation graphs. So I'm sure everybody will stay tuned to the end for those graphs.
yeah, certainly.
But the Nasdaq 100 you mentioned, I mean, new all-time highs. I saw, I think Joseph put a really interesting piece in the report a couple days ago, right? That was looking at it was 126 days from the last all-time high, I
Right.
believe, which seeing the index climb to all-time highs, seeing it just skyrocket back higher. I mean, intuition might lead people to believe, oh, that's a pretty sharp rally that might need to pull back and pull back in May. But at the end of the day, it's good to see things at all-time highs,
Yes, right.
right?
You'd
I mean,
rather
that's
that than the other way around,
yeah,
all-time lows.
right.
That was probably not the good one. But yeah, no, I mean, you're sitting here just towards the top of the trading band, having broken, past those resistance levels from earlier in February. With, I might add, not every chart looks like this, and we'll take a look at a couple that don't in just a moment, but with some nice support just above the middle of the trading band around that 50-day moving average. So things are certainly constructive, and like you said, you'd rather be at all-time highs.
Yeah, yeah. I mean, it was a notable stem, but I think it's interesting too that when you go, because once we get up to the 20,000 mark, it goes from 100 to 200 per box size,
Right.
right? What happens if we normalize that? You know, I love to play with my chart
Sure.
scales.
This is on the
Um,
fly, so maybe it's gonna not work.
We'll see. You shouldn't try it on your computer on the fly.
Right.
But yeah, it still looks pretty good. But it's you still support that, I mean, 2,800 level, right above the midpoint on the trading band. I mean, it wouldn't be surprising to see things pull back a little bit.
Right.
Not saying we're going to pull all the way back to there, but you see the NDX a lot of times over the course of the past few years. I mean, it's not a stranger to big stems, right?
Right.
But it's also big stems. You get a little bit of a pullback, get some normalization, continue to move higher, wouldn't be the end of the world. I mean, when we're looking at NDX, it's around the 80, a little over 80% overbought at the time of this recording on Thursday, which is a little high relative to what we've seen historically, but it's not, it's a little high for this year. It's the highest level that we've seen since, what is that, going back to last, no, December, I
Yeah,
think.
it looks like that.
But we were much higher than that several times throughout 2024. So it's certainly not unprecedented, even in the recent environment. So yeah, I mean, a good looking chart breaking out.
Yeah, the NDX, I mean, I'm not gonna throw the NDX and Bitcoin in the same conversation, but the point is that, you are the NDX is no stranger to extended levels. I think that's the point that we're trying to make. So, and you and I have talked about this quite frequently, actually. You can see normalization two different ways through price falling right back down to more normalized levels, or just through time, just by hanging out, camping up around current levels. And if we kind of just do exactly that, then ultimately you would see normalization that way as kind of the trading band drifts higher with fresh new values and old ones fall off. So
Yeah.
that is going to be, I think, the kind of the Goldilocks path forward. If we can just sustain some action above all-time highs for a little bit and really let things normalize from here as we move into the back half of the year.
Yeah, I think Chuck said it best. Pull back in price, pull back over time,
Yeah.
right? I mean, those are the two routes. And we'll see its way it shakes out. But I mean, the NDX, a lot of people think about that as your classic growth index, right? It does tend to be more growth oriented than other major domestic equity indices, given its heavy overweight towards technology,
Right.
communication services, that type of deal. Um, but it's more consistent than a lot of other growth areas, I would say, in its improvement recently. You look at some other charts, I mean, we can get into some of them that have seen sharp rallies, maybe breaking out to highs as well, but also are on much more significant steps. And you highlighted one in the report, was it yesterday or the day before?
Yes, yesterday, and it was kind of fun. I was like dusting off my dictionary here. VUG.
I saw we got some reply tweets on that
We
online.
did,
Yeah.
yes. But dust off your dictionary. This brought me back to the time when I was an intern, learning all the patterns and everything like that. VUG, which we're throwing up on the screen right now,
Chart
broke
number
a
two.
spread sextuple top. So it came up to that 425 mark, five, almost six Zen times, and broke through it on the sixth time. So sextuple there, very interesting. And now, but as you mentioned, Ian, we're extended up here on this big stem. We've got 18 X's here on our default chart. And so, unlike the NDX, which has got support kind of layered in just above the middle of the trading band, you're not seeing support there until kind of that bullish support line around 340. Now, that's a bit of a haircut to take. If we were to fall back all the way down to that support level, we certainly don't want to do that, right?
Yeah, I mean, similar picture, stocks breaking, or in this case, ETFs breaking out to new highs is a good thing.
Yeah.
You're like, we're never going to be sad about new highs, right? Well, it depends on the name, but for growth oriented
Right.
stuff, not sad about new highs. But you got a very clear consolidation range from December through February of this year in that 400 to 425 mark. I mean, it was right up to that point, right? I mean, you can see a clear consolidation on the chart. I would expect that would be some semblance of support if
Right.
we do get a reversal down. And we're just talking about that's $5 lower,
Right.
right? And
Exactly.
so that would be a natural area I would look toward. Or if we continue to climb a little bit, that 425 prior resistance would likely become future support
Yes.
moving forward. So that's not your classic point and figure. So sorry to those who are the pure chartists, but that is something that I think is typical for people to look towards. Prior resistance typically has a tendency to become future support, and those would be the kind of areas. So prior support or the prior resistance would be the kind of areas that we could look toward for support levels, so we don't all have to go all the way back down to the trend line.
Yes, very important point to make. And you can think about that logically, right? Bulls, if we're thinking about the battle between bulls and bears here, bulls fought ferociously to go and claim price action above 425. I don't think they would hope that they're not going to give it up so easily after fighting very hard to kind of reach that uncharted territory.
Yeah,
Regardless, I don't know what analogy I'm making here, but
no,
the,
that makes
the, the
sense.
point of it is that also, strong fund score, strong underlying holdings as well. So you can kind of dive deeper underneath the hood,
Mostly.
mostly, right? Kind of big weightings towards Microsoft, another five for fiver, Amazon, Meta in there. That's going to, kind of accumulate for around 20%. Apple's in there, which isn't technically so strong, at least with action taking
Yeah,
place
and that's a
here.
really interesting name. I mean, yeah, and you mentioned Apple there, and that's just shown real clear consolidation on its chart. We won't use that as one of our five charts today because it hasn't given a signal change since April. You saw it bounce off the bottom. It's just consolidating right below. Can't break back through to a positive trend. So we won't talk about that one. But I think you left out one of the stocks that has broken out a little bit more, right?
Yes, yeah. Nvidia is the one underneath the hood there. That accounts for about 10% of that total weight underneath VUG.
Is it back to the biggest stock? It's not a bigger weighting there than Microsoft within the fund, at least as of the last valuation. But with its recent movement, I know Microsoft has had a pretty good run as well. I think that'll be something.
I don't know off the top of my head.
Cut you off and ask a question I
Yeah,
didn't know the answer to. So
it's okay.
sorry about that. But yeah,
No, you're good. But Nvidia, I mean, very, similar type of action as we've seen it really move higher here, posting new all-time highs over the last week, moving past, that kind of top of the trading band around 152. Those are also highs from kind of later last year as well. Now, this one isn't one of those ones like VUG that is, up on a big stem. Now, it is overbought, right? But there is some support baked in kind of around the 130s to, mid 130s here. And then also we are a bit higher enough that if we did get a reversal back down, you could look towards some older resistance in that 150 mark or upper 140 mark as well to come in and play some defense around those levels. So Nvidia, obviously, one of the big guys, whether it's the biggest in the world or
It is.
whatever it is. Okay. So we to get that on the fly answer. But whether it is or isn't, it's a big name. Obviously, it's going to be a holding, one way or another for a lot of you that are listening. And we've really seen it storm back. Again, it's a 5 for 5 or has been for at least a month and a half at this point, and it's been technically actionable or strong, since kind of rebounding there since early April. So again, we've seen, nice action for Nvidia. I'm rambling. Step in.
No, I
Yeah.
mean that we certainly have, and that you can see the trend line that was in place for Nvidia, that negative trend line going back to earlier this year when it broke in through to a negative trend in March. I mean that was pretty clear. The trend line didn't technically start in January, but you can see from those highs, if it had continued up, it would have been the same line, right? So that was a clear point. It broke back through to a positive trend in May. Shortly thereafter, moved back to a 5 for 5 attribute name. I believe that I don't think that was the move. No, a week later it moved back to a 5 for 5 and just continued up straight higher, right?
Right.
You get a little bit of consolidation before you get to those all-time highs, which I think is important to note. That's kind of speaking to the prior point. Prior resistance it can be tough to break back through. But you get some support baked in with that as well. So yes, it's overbought. Nvidia has a big history of being heavily overbought for a very prolonged period of time.
Yeah.
Not saying that we're going to get that same run, but I think that it's very important that we are back at all-time highs with the biggest stock, right? It would be natural to assume some kind of consolidation or at least a pullback here, maybe into the upper 140s would be a reasonable point. That 150, if you get a couple other boxes up, that 150 mark, 152, right, those highs. But it's a good looking stock. It's hard to say otherwise.
Oh yeah, no, and you mentioned a good point about the trend break. Now, of course, hindsight's 2020. This could be cherry picked, whatever it is. I'll also mention though, we have been talking about some semiconductor stagnation really throughout the back half and early portion of 2025 and back half of 2024. That is, you could really see that kind of emerging on the chart while other areas of the market were storming forward. Nvidia, you take a look at SMH, for instance, as a proxy for semiconductors. You wouldn't seen some technical weakness, writing on the wall, if you will, before you got big trend breaks. So again, not to say the charts work, but sometimes they do.
No, and they do. And I think another important point in the video is that technically, if you had followed this trend line, if you sold it when it moved to a negative trend, if you bought it when it moved back to a positive trend, you would have lost out on about $6 of movement. So it wasn't profitable to take
Right.
that. But you would have saved you from falling from 104 all the way down to 88
Right.
or 87, I believe. I mean, that's a big downdraft. You would have felt pretty good sitting out of that. And then, of course, you would have felt pretty bad subsequently when it rallied back up, but who knew if it was going to break back through? I almost think from a psychological perspective,
Better.
that is better off to follow those. So even though the trend lines don't, if you look at it in a table, it's like, oh, that one didn't work. I would argue it did from a psychological perspective because you don't have to have that conversation with people when that stock's down in the upper 80s.
Sure, there is certainly a price to pay for sleeping well at night. I think
Right.
that's the closing point on that. Okay, well, maybe not closing on semiconductors, but at least opening up a new conversation, right, with TSM and Taiwan Semiconductor.
Close the door on domestic semis.
Yes.
And open up international semis.
Exactly. International equity has been all the rage. We've been talking about that heavily over the course of the last few podcasts. TSM, Taiwan Semiconductor, is going to be another strong 5 for 5 or very similar looking technical picture as it with intraday action on the 26 is challenging all-time highs respectively itself.
Yeah, and it hasn't broken out that to those new highs, right? I mean, it's up at 224. That's the level we got to there in January of this year. Kind of similar technical picture to other areas in the semi space, but it is different. It's shown more consistency over time, honestly. You saw very consistent downdraft and a very strong, steady, consistent uptrend with the last final thrust to get back to these all-time highs, right? We'll see if it can break through back up to 228 would put it at a new chart high. But the internet, it's the biggest stock in EM, right? So we're seeing emerging markets improve. A lot of it's because of this, and China's not really doing anything at the moment, interestingly enough. And so TSM, yes, it's overbought. Yes, it's at resistance. Probably a situation that would be ideal to look towards some kind of a pullback and normalization, like we were talking about before. It's kind of a consistent theme with a
Yep.
lot of these areas. Um, but at all-time highs again is not a bad thing, right? So you get some support at 192, support at 190, which was prior support back from January this year when it broke that trend. So that'll be kind of interesting areas to look toward.
Yeah, certainly. And the way that I like to think about this stuff is, it's not a all or nothing, right? This is a scenario where if you're a more aggressive investor, if you're more of like a pure trend follower, doesn't really matter, right? Something can always get more overbought, right? And so you can add here, you can also add on pullbacks, right? It does not have to be, you go and add the full position at one time. You can kind of play it by ear, kind of add a little bit, even if it's overbought, challenging resistance, just in case it does get a little bit more overbought, right? Or you could find a logical point to add a little bit more heavily, set an alert, and come back to it then.
Yeah, I think the whole idea, regardless of which one you do, is to have a plan and a process in
Yep.
place, right? So if you own if you have a model and it tells you to buy it, follow the model,
Yep.
right? If you don't, and or if you don't, and you want to look toward exposure, then have a plan to get out, right? Have that process in place before you pull the trigger on it,
Yep.
and that way it makes a decision down the road. Maybe you hold it for 10 years, maybe you hold it for 10 days.
Right.
Yes, right. Um, Probably not 10 days given the strength of it
Hopefully.
here, but we'll see. It does have earnings coming up in a little over 10 days on July 16th, so that'll be a pretty interesting catalyst to
Maybe
look
maybe
towards.
it will be a 10-day move period. We don't
We'll
know.
see. We just jinxed it. But the final chart, maybe in continuing with the international equities theme, we have seen improvement from areas in international equities, but we've also seen we saw some recent improvement from crude oil that then turned around and backed off heavily
Right.
at the beginning of this week. I feel like international equities and crude specifically had been in the conversation a lot. I think they've been a lot of our featured charts since we started
Yes.
doing this over the course of the past couple of weeks. So decided to take a look at the correlation, trailing 36 months, so 3-year correlation between international equities, ACWX, and spot crude, CW forward slash on the site.
See you.
Or sorry, CL forward slash on the site. That reading peaked up near zero point 0.8. It was up in the high 0.7s back in 2020. It has since moved lower continuously over that time, which what does that mean? It means when it's high, when the correlation is high, it means that you would expect movement. When you see improvement in international equities, you see improvement in crude. They move similarly, right?
Right.
A correlation of one obviously is going to be they move at the same time or they move the same. Correlation of -1 is going to be they move the exact opposite. We're now at about 0. So I think that's for those looking at the chart, you might say, oh, if we see crude bounce off its trend line currently and move higher, that could be a reason to sell international equities. It's saying honestly, no, not that's not what it's saying. It's saying don't look at them in relation to one another anymore.
Right.
It's kind of what it's saying.
It's super easy to, kind of get lost in the weeds of, oh, well, it used to be one. Now it's zero. That means that they're, they're negatively correlated. There's a difference between uncorrelated and negatively correlated or possibly correlated, right? And so it's important to remember that type of stuff. It's easy to think, oh, well, international equities, that you kind of lump them in with emerging markets, copper, crude, these things are going to be used in production of materials and things like that. But again, you've seen that kind of correlation drop off a little bit. And to your point, Ian, just because you see that correlation, it doesn't necessarily mean that they're both going to be heading in the same direction anymore.
Yeah, and the other point that I think was interesting, at least for me when I was looking at this, was the last time we saw a this correlation have sustained movement in positive territory and fall into negative territory
Right.
was back in the early 2000s. So you're looking at 2001, 2002, all the way into 2005 at its low. Um, Obviously, some similarities between the current geopolitical situation now and similarities back in the 2000s. Certainly some differences. The biggest difference is that the US is now a net exporter
Right.
of crude, whereas back then we were certainly an importer at that time. So I think that's a big difference between back then and the current environment. But at least prior instances, periods where you see this correlation declining, it typically doesn't go deeply negative, right?
Right.
And it can be bullish for international equities as a whole, at least if you look at the one other time that we've seen this
Right.
happen.
Yeah.
Um,
Selection of one. Right.
yeah,
Very
and it
bullish.
all goes
Yeah.
back, I think, to movement of the dollar. If we see
Yeah.
further declines or at least consolidation at lows of the US dollar, we don't see it bounce back up, you're going to get improvement from international equities. You'll probably get some improvement from crude oil as well, or maybe some back and forth action there. Commodities as a whole will probably be looking good, but it's all going to come back to that. That doesn't mean that just because this chart's moving lower, it's time to sell international. It could be a bullish thing. We'll see.
Our sixth chart for the week, the US dollar. No, I'm just kidding. We definitely
We'll save that for next week. That'll be the
certainly.
first chart of the second half.
Yeah. Well, anyways, hope everyone had a great time. Ian and I certainly did. We appreciate you spending your afternoon with us, your morning with us, whatever it is. And we will be back again next week to open up, just like you said, the third quarter here, and wish everyone a happy 4th of July.
Great.
Interesting. So,
Thank you all.
have a good one.